Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, December 7th through Friday, December 11th, 2009. Well, folks, let's get right into it here as we discuss last week's action on the markets and look towards next week and discuss what could be next week. Now, the key about last week was really the massive amount of data culminating with the unemployment rate on Friday, which we did get out, and it did drop 0.2% to 10% from 10.2%. Now, the key about that again is that you had a loss in jobs of only 11,000, folks. That's huge for the last month. I mean, if you talk about November and only losing 11,000, it makes people think the recovery is even closer. Now, there's a couple things you want to know about that number. Number one, manufacturing jobs continue to be lost. You gained jobs in the services industry, whether it was retail and that kind of thing. That's really where you saw the gains in jobs, which is a little misleading in my opinion, because remember, holiday, Black Friday, all that kind of stuff is going on. That's creating a little bit of jobs for the holiday season, so you get some hiring there. And again, probably a large portion of that why the number was as low as it was. Now, again, the market doesn't necessarily care, or what it wanted to do on Friday was attempt to rally, and that was going very, very well until we got the dollar to start to spike higher. And the dollar squeezed, and we called for a squeeze last week in the dollar and been short gold, and that was a beautiful trade, made quite a bit of money, as did our premium subscribers of the Research Center and the chat room. Now, again, what really continues to be the catalyst for this market is the dollar, folks. And I'm going to show you the dollar chart from Friday so you guys can see exactly what happened. There it is. This is literally pretty much the biggest update in the dollar that I have seen in quite a few months. And what you saw again was just a squeeze. This was a good old-fashioned squeeze on the dollar, probably triggered by, again, the jobs data showing that the economy is pretty strong. It could be money flowing back into the U.S. if it is recovering like that. But again, what we'll see is, does this continue on Monday? So one of the big things I want you to look forward to next week is whether or not the dollar continues its upward momentum. Now, wouldn't be shocking to me to see a pause on Tuesday, Monday-ish time frame. You know, see that kind of pause, maybe a bullish pattern develop on that chart. We'll have to see. Maybe it has a little more in the squeeze tank first, but ultimately you do start to look for that kind of consolidation and then break higher on the dollar off these levels, in which case that should put some pressure on the markets. Now, again, personally, and I'll say this again, if you see consolidation Monday or Tuesday, that should dictate that the markets go higher. Remember, consolidation is sideways to downward move on the dollar here. That would, again, any sort of downward move is going to trigger a move in the markets to the upside. Now, the crazy thing about it is we go back to the spiders, folks. Let's go back to the spiders. The markets were unbelievably volatile late last week. Early in the week was dead. All right, Monday, Tuesday, even Wednesday, the volume was minuscule. I think by Wednesday we did about 130 million on the SPY, but Thursday and Friday made up for it. I mean, it was off the charts on Thursday and Friday with volatility. The trades in the chat room were out of control, just left and right, profit, 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 profit. I think, again, we went 100% on the profit side of calling out trades there. But in any case, what you're seeing here, folks, again, is the volatility. Clear as a bell. You had a big uptick on Thursday, 2 candles uptick. Look at Friday, 2 candles uptick. Then all of a sudden the markets collapsed back down and they went back to the flat line, traded sideways for most of the day before rolling over. On Friday, you had a big rollover all the way back to the flat line as well, but then you kind of bounced around and chopped around in a very, very whippy manner for the rest of the day. Again, mostly based on the dollar. If you look at this intraday UUP chart, which is the dollar index, these little pivot point pullbacks were the key little moves in the market. So you had one pullback here between 11:30 and 12:30, and then one from really 3 o'clock to 4 o'clock. And if you go to the SPY, those down moves in the dollar are going to coincide with, look at this, 11:30 to 12:30, and 3 o'clock to 4 o'clock. So see how that works, folks. See how just a little bit of weakness coming into the dollar caused a big spike on the markets. That's what you want to continue to look for, because the way things are set up right now, the dollar is everything, and it continues to be everything. Now, granted, the markets did end slightly positive, but we were up about 150 plus points on the Dow before this all came through. And once you saw that, the Dow really just ended up about 23 points on the day. Very, very minor up move. S&P was up 6, which is about 0.5%. NASDAQ had a strong day, up about 20 points or 1%. But again, guys, going into next week, the dollar will continue to be key. Now, there's some key master level stuff you have to watch for. Before I get into this master level stuff, I just want to reiterate the hidden gems will be posted Monday in the first hour of trading on the website. All right, it's another China play like SKBI, so be ready. SKBI running about 80 to 88% from the mention that we gave it. And again, the next hidden gems that will be released in the first hour of trading on Monday, so be ready for that. Join up for that. That definitely looks to be another big big play in regards to China plays. All right, China hot sector still. The market again. A lot of these China plays have started to go, and they continue to go. All right, now going back here to the folks on the SPY, we're talking about pivot and major levels and master levels. What you can see right down here, this is the upper Great Wall of China, which I've talked probably about even in these weekend videos to you guys time after time, probably for about 2 months now, because they've been so in play, and we called it before it got up there, and then once it got up there, we've been able to maneuver off of it every time. But you can see here on Thursday, we ended just above it. What did that mean? When you hit a master level after being away from it for a certain amount of time, it dictates an up move. Sure enough, look at the size of that up move. I mean, a lot of people talked about going long there off that move, off the Great Wall of China, because they knew it was the Great Wall of China and such a powerful level. Then you sell off. Where do you go? Right back to the Great Wall of China. What happens there? You get another bounce. That's also a double bottom. So see the technical reasons for that bounce. Not only is it the Great Wall of China upper level at 110.34, but you also have double bottom, gap fill, you name it. It's all right there. Now you bounce off of that. You go right up here to another key level of ours, right around this 111 area, 111.15, 111.10 area. You pull back sharply, and you do close below the Great Wall of China. But the question has to be asked, if you use the in-the-money stocks confirmation signal, did you actually confirm a down move there, or was it a little bit of a fake out? And the answer would be you did not confirm it, therefore you expect a reversal again. Not only that, but you have a beautiful bottoming tail here. This is a beautiful bottoming tail. Beautiful bottoming tail, added to lack of confirmation in the money stock signal right there. That's telling you this market's going right back up, and sure enough, look at the move back up. So again, the methodology will continue to dictate which way this market goes. Literally 90 to 95% of the time, it does seem off of these levels that we're going to give you, or we continue to give you. And again, these are just intraday levels. I won't show the daily levels. That's for the research center guys, the premium guys, obviously, at inthemoneystocks.com to have that type of data. Right now, I can do the 10-minute because they'll change so rapidly. But in any case, continue to watch this, folks. You want to see how the market reacts. Again, watch the dollar. If the dollar opens up with a small pullback tomorrow, you have to expect the markets to open up higher. Then what you want to do is just watch which way the dollar goes. Do we continue to squeeze, and what happens from there? Now, a lot will have to do with gold as well. Gold was, as I mentioned at the beginning of the video, we did short gold, and we shorted gold all the way up at these top area, right up in here, folks. So this is where we were going short gold, all the way up here, somewhere in this range. And then again on the GLD, we used the DZZ to do it. And again, look at the drop on gold. Where did we take our final position off the table? Right at the 20 moving average. Why? Because you know that the first hit of the 20 generally gets a bounce, and sure enough, this is where it closed by the end of the day. So you got that, and we nailed getting pretty much the highs of the day on our short ETF, which again was the DZZ, and utilized that. And again, maybe we'll look for a re-entry. We'll have to see how things go. Now, again, the other thing we'll watch is what happens to gold in regards to Monday's trading. If the dollar is slightly weaker, you probably anticipate that gold trade going up a little bit. If the dollar continues to squeeze, gold will continue to fall. Gold is still overbought, but now it hit the 20 on the daily chart, and you have to look for a little bit of a bounce. All right? So keep an eye on that. Other than that, what you're going to watch for, obviously you're going to watch for key levels. You're going to watch for confirmation. These are all terms that the premium subscribers are going to be privy to. I'm not going to go into them much because I want our premium subscribers to really have the advantage on trading this market and continue to profit like they have been doing for the last couple years. All right, folks, have a wonderful rest of the weekend. Watch next week. There's not a ton of economic news, so it's going to be light in trading most likely. Again, until Thursday's initial claims, there's almost only like 2 or 3 economic reports coming out. So it's going to be slow. Have a wonderful rest of the weekend. We'll talk to you on Monday. Take care.